What's up guys, Vladimir here from Home Trader Club and welcome to our another weekly trading review. In these educational videos I want to break down the reasons why I made my trading decisions the way I did. And you will see here precise analysis. I want to explain the logic behind my analysis, that the determination of trading levels and execution of the trades, where we want to execute the trades and how, and where do we aim. As I mentioned before, the purpose of this video is educational. This is a new playlist on the channel. You can watch here the full playlist, of course, the episodes of How Do I Trade. So what we will be doing here, I will take all the trades from Home Trader Club that were generated among all of our channels. In Home Trader Club, we share with our members trades in live sessions on Mondays. In the main channel, which is based on waves and cycles, it's more like mid, sometimes swing trade. Sometimes it's short term as well if the market moves fast. And also we have the short term group, which is part of our all-inclusive package. So you will see here varieties of trades. Most would be from the short-term groups because there are more short-term opportunities. And I want once again to explain the logic behind it. Today I review the last 2 weeks. This last week, as we are now, I recorded now, and this is Friday. So this week and the week before. Okay, so let's begin. Before the trade, as always, big thanks to 8K Broker for their support in our community. You can continue and enjoy all the special offers we have with the broker and get access to all of our projects, including the private mentoring sessions. Follow the link below this video in the description. So let's start with the euro dollar. What did we have here? This is the short-term trade we spotted, and I want to explain both the analysis and the reason behind the trade. We are without a doubt in a clean bullish trend here. Okay. Now the verification for such a trend, that each of the yellow waves we can break down to smaller waves, right? 3 waves up followed by 2 waves down, then again 3 waves up, again 2 waves down, and again 3 waves up. Now in that case there is no bearish divergence, ending divergence between the major highs, which means usually that after the retraces we do expect the pair to continue higher until it will create divergences. And it will start on this time frame, then will be on a higher time frame, and that would be your time to cash out. So the trend here is clean, perfect structure. Now we need to determine how and where we want to buy from. So the idea where we want to buy from always comes from broken resistances that act as support, and also, of course, if you want to buy, you would want to buy around the lows where the buyers already proved their interest. The interesting part here, it's pretty easy to spot when you pay attention to that. So this was the recent wave here. Let me just draw it here. This is the recent wave upside, right? Broken resistance becomes support, low of interest of the buyers, of course, the similar thing here. So this creates for us the first zone. Then we have a major lows here with a lot of resistances. That's zone number 2. So what we want is the price to get in, start to form rejection from lower lows to and lower highs to higher highs, higher lows, and that is our sign for the buy. So it starts to form right here next to the buy zone number 1, which gives a great indication that the euro dollar is ready for the buys. And what happens with the euro dollar, it actually delivers from this rejection while holding good buy zone number 1 and starts to climb higher. Here we started to form a bearish divergence on the 15 minutes, and here we actually formed the divergence on the higher time frame as well, which is a perfect place to actually take the profit. So the euro dollar short term delivered very nicely. Let's go to the next trade. The next one is going to be the euro pound, and this trade was also short from the short term group, part of our all-inclusive package. And let's break it down. What did we have there? But before that, I would like to remind you that on our blog, VladimirRibakov.com, you are able to enjoy all the trading opportunities, articles, educational videos we publish during the week. You can scroll down and you will see here all the trading ideas we share and publish here for you. You can also go to the Forex education, get the complete guides for both beginners, advanced, enjoy educational articles, and as well download our amazing tools we have for our members. And here under the strategies and courses, you would be able to enjoy all our in-house indicators and our tools from the marketplace. So the euro pound, what did we have here? Classical formation of a zigzag, one of my favorite, with the momentum, 2 waves up, 2 waves down, and breakout. Now, honestly, this one is tricky because it is moving in a range. Usually, I tend not to trade it, but the higher time frame analysis, let me show you. But the higher time frame analysis actually was supporting attempt for the buy. We are in a bullish trend. We got some range, and it actually managed to get above that, starts to make higher highs, higher lows. It actually looks good. So when I spot this and it gains the momentum with the break here, I'm taking a look. Okay, so do we have any signs against? Like a bearish divergence? The answer is no, we don't. It's higher highs on the chart and higher highs on the MACD. Usually a sign of synchronization. We want to buy the dips. How do we determine these dips, right? So on the lower time frame, we will want to see where we have broken resistance that acts as support and low that acts as demand. Broken resistance became support, a low with the momentum makes a demand, and that's a classical buy zone number 1. Similar with buy zone number 2. That's the momentum we got. Broken resistance becomes support. I marked this range here as this is where you can see the buyers took control, then a range, and then buyers exploded. So this is a demand area as well. So either from here after some rejection or from lower after some rejection, we want to get in the buy. What happened with the euro pound in that case is it came all the way down to buy zone number 1, created the rejection, first rejection, then another rejection. It was trying to spike through, as you can see, but failed. It doesn't manage to hold below that, and from there flies to target 1 and target 2. And as I mentioned on the euro dollar before, we need to pay attention to where divergence against develops, because if there are no signs against us at that point, then we should be looking what happens next, and next starts to form clearer signs against, which means the great opportunity to cash out and enjoy the move this pair delivers. So the euro pound was actually go with the momentum. The strategy implemented here was the break of the zigzag pattern on the higher time frame. Higher time frame in that case was the 30 minutes. It could be 1 hour, doesn't matter, it's just more visible there. And then verification on the lower time frames that the momentum was with us. Next one, pound Aussie, also from our short-term all-inclusive group. The momentum here shifted. Let me show you why I like this one specifically. This was the place where the trade was determined. A bullish divergence on the 4-hour chart, and then we spot a reversal pattern where it actually makes 2 higher highs, higher lows. With the higher time frame supporting the bullish momentum, this one got a very strong run. Now, this one is a bit tricky because it does have opposite divergence, which means if it completes 2 waves and holds this area, we will be looking to buy from there. So what happened with the pound Aussie? We want to look for the buys, and we create two zones. How do I determine these zones? Broken resistances that become support, low that act as demand. Resistance act as support, broken resistance act as support, low of demand create for us a classical area. Similar here, resistance and demand of the downtrend, and we create a zone number 2. So in that case, we want the price once again get in, create a rejection from the lower highs to and lower lows to higher highs, higher lows, give us the green light that the buyers are ready to take the control. Now let's take a look what happened with the pound Aussie. So this was our first zone we were talking about, and here is the classical rejection. We were completing these two waves down, right? And then from the candles that made lower highs, lower lows, we start to create higher highs, higher lows. This is the green light, and this is why you can see I get my buy in the game here. This one specifically was executed on this platform, that's why you also see the lines here. Now another very interesting part here, in part of this zigzag, it was two waves up, two waves down in range, but look here on these candles. Look how tiny they are, which usually teaches us what? The sellers are weak, and once the momentum is broken with the support from the higher time frame, this is your time to take a buy. As per the target levels, I always am good with the previous highs, of course, even though it continued higher, but for me it was more than enough, as this was a short-term trade. Next trade I want to explain was the New Zealand franc, a classical buy, short term. Why? Look what happens here, classical bearish trend, no doubts, and then bullish divergence. Now it's not only bullish divergence, it's also bullish divergence that comes after a fake convergence. What do I mean by that? Between these lows, as we can see here, low 1 and low 2, there is a divergence. Between low 2 and 3, there is no divergence. Lower lows on the chart and lower lows on the MACD moving averages. That's a sign that tricky. But between first and third lows, there is a bullish divergence because the MACD still goes up. And that's a classical sign which I personally love. Moreover, this trend line connecting the lows was false broken, and now we are making higher highs, higher lows, and between the highs there are no signs against. This is a classical bullish trending structure. The recent trend line is broken as well. Perfect to look for the buys. And here we are on the New Zealand franc 15 minutes determining the buys. Broken resistance becomes support, lows for the demand levels. So what do we have here, and why do I like this zone? Little range before buyers to control, which corresponds to this range. That's why I mark this level, classical demand area. Broken resistance, broken resistance, broken resistance, broken resistance all act as support. Perfect zone number 1. Similar here, low act as the low in an uptrend act as the demand, low in an uptrend acts as demand, perfect area. So what we want is once again price to get there, reject from lower highs to lower and lower lows to higher highs, higher lows, and then we want to jump on a buy. And here we are, we enter inside here. It happened twice, here and then here, and then the candle starts to reject, create a beautiful buy opportunity, and as long as these levels hold, we expect to see the rally. And then we completed the rally until on the higher time frame there were divergences against, which means this is a classical sign for the profit. Now I want to mention a very important thing here. When it comes to, because from the last video I published, there were questions that were sent to our support. How do I know how many pips to look at? So it's not a scalp and it's not a swing. Usually the day trade I like to do is 1 up to maximum 3 days. That's it. That's for me short-term trading. Day trading, of course, during the day. Now, as per the targets I like to take between 1/4 to 0.5%. Why? Because this is a usual average price change for the instruments during the day. How do I know what is a percent? So it's easy. You take the first 3 digits of a quote, in our case 0.45, which means 45 pips, right? And that makes it 1% change. When the market goes up or down 45 pips from the beginning of the day, that means it makes 1%. So half of that is going to be about 22 pips. That's half pips, 0.5%, and about 11 pips, that's going to be 1/4%. So between 11 to 22 pips in that case, for me, this is a great target. And as you can see, that's pretty much what is that about 120 points here, which is an absolutely fantastic percentage change and target to take. Next trade I want to talk about is New Zealand dollar. Beautiful zigzag. I already mentioned a few times the zigzag this video. 2 waves up, 2 waves down, and bouncing off the low. Perfect conditions. It gains the momentum, it makes the classical bounce. So if it goes back inside, I want to buy. Why specifically here? The low of the zigzag is the demand, the low of the major structure, that's what creates for us a classical buy zone. As per the target levels, we would be aiming to the next key supply levels as our targets. Remember what I mentioned on the previous pair, 57 pips in that case means 1% change, 28 and 9 means 0.5% change, and about 14 pips will take it as a 1/4% change. So between 14 to 28 pips, that's where I want to take the target. From the buy zone to the first target, that's about 20 pips, which stands perfectly in the conditions, and that's why I want to look for the buys there. And here is the New Zealand dollar coming in the zone we wanted. This is our zone, creates the rejection. Look at that, from lower highs, lower lows to higher highs, higher lows, and making a beautiful buy. It came all the way to the target we were talking about before, delivering the expected profit. So the strategy implemented here once again is a zigzag and the waves on the shorter time frames. This is a perfect combination which will give you more than 70% accuracy if you execute it correctly. Next one is the oil, which we all know after Trump threw some sanctions on Russia, the price started to rally. But also look what happens here technically speaking. The wedge here with a bullish divergence making lower lows on the chart but higher lows on the MACD, then breaks this pattern and make higher highs on the chart and higher highs on the MACD. Perfect bullish structure. It was similar to what we saw before on the New Zealand dollar, right? Now, if we take that, we want to buy these retraces. Now, let's see how we determine the levels. So, the structure develops here on this very time frame. The low through the resistance, it's zone number 1. When I say low here, take a look that I marked it slightly higher than the low itself because there are several candles bouncing around this zone, right? So this is basically zone number 1 and zone number 2, low, 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 and creates for us a demand. So we want the same story. Price come there and make the rally. Now pay attention what happens here because it didn't go directly in, it bounced slightly earlier, which, let me show you here, which makes it trickier, right? Because if you wait for inside the area, then you miss this opportunity. If you just jump in with the momentum, like in this case, the break of the range, you are able to enjoy this run. Now, why do I show you that? Because simply, and it's important to say and important to mention, not always the market will make the pullback you expect. and sometimes it will just make the move. If you jumped in, perfect. If you didn't, don't force it. There is always tomorrow when it comes to trading. Don't chase it. It's a mistake a lot of traders do, and simply let it go. There is always next opportunity when it comes to trading. And the final one I want to cover was from our main channel. This was silver sell, and I absolutely love it as it's based on one of my favorite strategies when it comes to cycle, convergence, when the price flips from higher highs to higher lows and makes it synchronized with the indicators. So on the silver we spotted on the higher time frame, let me show you actually here, we spotted here overbought on the daily chart with a bearish divergence on the 4-hour chart. Higher highs on the indicator, lower highs on the moving average of the MACD. And then when we want to go to the lower time frame, we want to the price to flip. What happens here with silver, we got this false breakout, fake high, and lower highs on the MACD, sorry. So if it breaks this low and make lower low as well, we want to get in the trade. And now what happens with the silver, as you can see, it did not manage to get fully below the low, touches that and bounces, but look what happens here. It recreates another high, another divergence, and break the same zone, right? It managed to break this low, and now for real it managed to get below. You can see the closest below here, and lower lows on the indicator and the chart together. That's a perfect condition. We want the price in, we want the rejection, which happens right here, right? And from the higher highs to the lower highs, lower lows, and gives us the sell all the way to the target, which was around the previous key low. This was our first target. Then it actually reached the final target after that and delivers absolutely phenomenal drop. This is one of my, maybe even the most favorite strategies when it comes to reversals with the higher time frames. Cycles, I absolutely love it, and usually the risk reward in these opportunities is high enough to deliver great profits. That's it for this video. Lots of trades executed on the last couple of weeks. I wanted to show you the most interesting of them and explain the logic behind that. So I hope you find value in these videos. As always, I create this playlist to keep and explain the logic behind the trades as we share them in Home Trader Club. Why, when, and how. Simple. If you have any questions, don't hesitate to ask in the comment section. And if you are new to our channel, please consider to subscribe with the subscribe button below this video. I want once again to welcome you to our family, Home Trader Club. The link to join below this video in the description. Thanks for watching. Best to you and yours. I'll see you soon with more. Good trading. Bye for now.